I'm joined by none other than the one, the only Julian Wheeler from Shard Capital, who is the US equity strategist there and also partner. Thank you so much for joining us.
Well, thank you, Ange. Happy New Year. Happy New Year back again.
And the markets must know when you're coming because, boy, have we had a roller coaster ride.
Well, it's all moved again. I talk about it's well known, the January effect, as people say, right, start again, and they push money at the market. And there's an old saying, which is what happens on the first 5 trading days of January gives you the direction for the year. Mm-hmm. So the first 5 days were up, so it should be an up year.
Fourth, it
would be the fourth. The fact
is,
a
long time.
Yeah, some people talk about the whole of January. I think the first 5 days tell you on positioning. But yeah, so I think the fact is, without a recession, the market's going higher.
Let's talk about long term, and then go to the short term investment strategy. So long term, you like Costco?
Yes, Costco. Costco, obviously, everybody knows Costco, I imagine. Maybe some viewers are members. I don't know about you, but
I have obviously traded Costco. I have never actually been in one here.
Okay. Have you been in
one
in
the UK? Yes, I've been in the one in the States, but not
one in the States. There's more than one.
The Costco in the US is astounding. I have not been to one here in the UK.
I can't believe anybody doesn't know what Costco is, but Costco is the more or less invented the concept of the warehouse club. You pay a membership, it's sort of cash and carry for everybody. Trade involved as well, but basically every person can be a member of Costco, and you pay a membership, and that gives you savings. What is important about Costco is 81 million worldwide members. It's all over the world. They've expanded all over the place. Costco's been around for ages. This isn't new, but what's new now is that they've come off a poor year, and now they've turned, and the real turn was seen last week. So that's why I didn't talk about it when I last saw you, because I hadn't seen the December numbers. Mm-hmm. The December sales numbers were plus 6.3%. The market thought they'd be 5%. So 20% ahead of expectations. So they sort of won the holiday, as it were. The battle for the retail hearts and minds. Now, what's so important is that, membership. That's 50% of profit. Okay? So if you've got 50% of profit, think of it like Netflix. People just pay every month. Mm-hmm. The difference with Netflix, they've got to spend that money on making new programs, and you've got to like it. Mm-hmm. All you've got to like at Costco is going back in there and saving money. Now, you don't have babies.
No.
No. Do you have a dog?
No, I do not have a dog. Also, I do not like retail.
You don't like retail. Okay. Well, you don't retail.
However, there is. I do have problems, and I'm going to poke holes at this theory in a moment. I have a problem with Costco, in that the people that I've canvassed before, I don't have a position now, but I did have a position before. They tend to go in and they buy a lot of stuff that they actually don't really need. So, so it encourages you to bulk buy.
Yes, I mean, you're there to bulk buy. Just very quickly, why Costco is so good, why they can afford, the membership that they charge. We did a little study on this, it's done, I got hold of it. If you have a dog and you go and buy your pet food, obviously that's not a discretionary item. Mm-hmm. The dog has to be fed. Mm-hmm. You can pay, if you just buy a year's worth of pet food, it pays your membership 7 times over. That's the saving versus going to Walmart or Amazon or anywhere else. Mm-hmm. On nappies, turns out to be the next best thing, that pays your membership back 3 times over. Anyway, all of this means they have 92% renewal, right? Members renew 92%. Mm-hmm. That is very, very good. That's very strong. What's key now is, quite simply, they've got this new executive membership. It's not really new. Think of it like speedy boarding on a plane. You don't go so much first, but you can go in before everybody else. So
this is the half an hour early.
Half an hour early or half an hour late, etc. People like that, so it's not crowded. And the pickup and revenue is huge on that. You pay 50% more for that, but you also get a cashback like you do on a credit card. You get 2% back on everything you spend.
Oh, now you're talking.
Yeah, you go. So the point is, this is just the business. But why now? Why buy it now? Because they've got easier comps. They had a poor year last year because they were competing against a really strong 24. So the stock sort of goes up, down, up, down. If you've got a chart of it, you will see that last year, there we go, thank you very much. You see, look what happened from last summer. That stock went straight down until, look what happened a few days ago. Oh, wow, amazing Christmas. But that's the start, because now it gets easier.
Let's take a look at duration, because everything about investing, you need to know what your duration is. So in terms of longer term, is this a hold for all of 2026, or is it just until we get further clarity on consumption and strength of consumption going forward?
Okay, I reckon, here's the kick. There are two kicks this year. One is the fact that it's turning and it's got easier comps going forward. Two, they pay a special dividend now and again. How often? Every 3 years. Now, there's nobody says they have to do that, but let's go through the maths. The last one they paid in April 2017. They paid in November 2020, December 2023, right? They've got 16 billion in cash. It's a 400 billion market cap, roughly. So they've got about 4% of the company in cash. That equates to about $40 a share. Every time they've done one of these special dividends, it's 50% higher each time. So they did one of 5, 7, 10, 15. The one 3 years ago was $15 a share. I think they'll put out a $22 dividend.
Interesting.
So you're going to get a 4% yield on this. And Morgan Stanley did a piece quite a while ago that they checked and ran the data on every single company that's ever announced a special dividend. Any company announcing a special dividend outperforms the market by about 4.5% over the following 6 months after the announcement. There's a chance, I think, that Costco announce in this Christmas quarter special dividend. Now, they might not, but every 3 or so years, they do. So they're due one. We're now due another one this year. So that's what will hold the stock. The fact that it's underperformed, as I showed you, Walmart's been so strong. So what you tend to see is a rotation. I think Walmart's probably done enough here. And so I can see money coming from Walmart to Costco. So I think it's a very, very solid. And if there's a slowdown, this is a money saver. If it's all about how we saving money. But the other thing is, this isn't, the demographic that goes to Costco is not actually the lowest cohort of income. People like to go because you go and you find amazingly good wine there.
They do,
example,
yes. And it's also an interesting demographic because it's people who have the ability and have the money to stockpile, and they tend to be people with big sheds.
Big sheds. It's American family stuff.
Yeah.
Right? It's you've obviously got to have room, and you can buy amazing deals on meat, fish, stuff like this. So you need a big freezer.
Yeah.
Well, your average person with a yard and a big, people have space in America, so it works for Costco.
Let's talk about Shoals.
Shoals. Okay.
Because this is one that we spoke of previously, but let's have a quick look at Shoals as well, because this is the plug and play. It hasn't actually poked its nose above my resistance level, which I've drawn with that golden yellow line.
That little,
but give us an update.
Okay, so where you've got the line there, that's at about $10, 10 and a bit. That was ahead of the last quarter. And when I came on, people look back at your old versions of the show and you'll see, I'll give you the full story. So I won't repeat it now, but you have to go and look at the old show to see what Shoals is all about. That was ahead of the quarter. Now, I've spoken to the company since then. I had a conference call with them. And I said, I think you're guilty of gunning the stock a bit and goosing up the sell side and getting them all excited when you had nothing to say. And he went, yeah, that's pretty fair. So the disappointment was a lot of people who were expecting really good news back there in November, and it didn't happen. So they all take profit, down it comes. However, solar, right? If you remember what this is about, and it doesn't have to be solar, but it's energy storage. Energy
plug
storage,
and play.
Plug and play, but it's about, they sell to utility scale solar projects. Why this year? Why is this going to be another great stock this year? Because it's all about tax credits. Tax credits on solar, Trump hates solar.
Yeah.
So they've got rid of the tax credits. They've already got rid of them on the electric vehicles. That happened in September. But with utility scale solar, the credit runs out on July the 4th this year. If you've started construction, you qualify. So there's going to be a massive pull forward of things to start. It's probably going to be a bit like those terrible builders who come to your house. You know, they start on a project with you and then they just leave a dirty hole and then they go off and do the next job. So they've got you. Now, Trump and co won't let that be a total thing, but you're going to have a pull forward. So I think Shoals will start to announce incredibly good backlog. You want me to quantify some of this?
Yes. So what's the duration then? Is it before July 4th? Keep an eye out.
No. You want to? I think you buy now.
Buy now. But what I mean is keep an eye out to come away near July 4th.
If the whole thing is run, all the good news and the concept of all this buying will have happened by July.
Yes.
So I reckon this is a 6-month trade, possibly. Look, if you take the long term on this thing, if you remember the story, this company has the ability to get an award damages from the Italian company Prysmian, which is worth about 5% of the stock price. I asked them about that. They won't take money. What they'll do is they'll get a discount on all their cabling they buy in from Prysmian. But that'll just be margin enhancing. So there's a lot going on for Shoals. So I think it's going to be great. We were just a little early. So you'll be patient.
Fantastic. So we've got a long-term view there, but also bear in mind, if you enter now, then look to take it off before July 4th. I'm going to have to move us on because we've got so much to cover here.
Yep.
Old Dominion.
Old Dominion. Okay, another one I talked about. Again,
Trucks.
Trucking. Now, when I came in, I nailed this one. This one's just luck.
Look at that.
Yeah, because I said, look, this thing's at the bottom.
Let's have a look at the weekly.
There we go. Yeah. It was down there, and I came in to see you about there, down the bottom there. And I said, this thing's at the bottom, and you're going to get a turn. Now, with this one, though, I did a call last Friday with industry, trucking people, and not Old Dominion themselves, but people in the industry, private companies, so they can say what they like. And they said, you know, it hasn't really turned yet. Nothing's really got that much better. And I said, how about capacity? Capacity hasn't really looked to exit yet. We've got the driver problem. You know, we talked all about the drivers.
Not enough drivers,
not enough drivers, but it hasn't happened yet. So I think this is a little bit ahead of itself.
Right. So take profit for now?
I would now be taking profit on this ahead of the quarter, right? Because otherwise we might have another Shoals, right? Where the stock runs up before the quarter, not enough in the quarter, and gets sold off aggressively. It's a great company. It's still going to be good. But I think you get a better chance to buy it. So if you did buy it, when we talked about it before, it was around 130. It's now 173 or something now. Another big move. Well, that's pretty good in, what's that, a month?
Yeah.
You know, this is the thing. Things move so fast now.
They do.
And, you know, so I can give recommendations that I think are worth 6 months, but they happen in 6 weeks.
And also what's important is you can always look for re-entry.
Yeah, exactly.
So Alcoa is the other one.
Alcoa, okay, that's the other one I talked about.
It's like the investment version of speed dating.
It is speed dating. Okay, speed dating. Well, my date Alcoa is the seriously hot chick.
Hot.
Look at those green bars.
Oh,
boom, boom, boom,
goodness.
boom, boom. Look, anybody, and you talk about metals. I know you love silver. You have John on here. He's been waxing lyrical about this stuff. Frankly, it didn't matter what metal. Metals
I have pretty much the whole complex.
Nuts.
They have gone cuckoo bananas.
They have gone nuts. Now, however, if you go back to my story on Alcoa, there's lots of specifics. I think I did this one with Rich. That the whole story of Alcoa hasn't changed a bit.
No.
Nothing's changed. Let me just remind you of something about our aluminium. China is the OPEC of aluminium. Okay? They are 50% of the world's supply. Now, what's changed is that China, in my opinion, this hasn't really been written, this is just my thinking. China doesn't need a low price of aluminium anymore. Why? Because they're not building like they used to be. How do I know this? Because exports of aluminium from China were massively up 2025 versus 24. So they're starting to export. That means they're just selling it. Now, if you're selling it, think of the Saudis and oil. What do you want, a high price or a low price? If you're the swing producer and the seller, you want a high price. So they've curtailed supply.
What I also like about this is that with China, it is doing something quite remarkable at the moment. For example, silver. It used to just sell the muck, right, from what it's using. And if there's any muck, if there's any mining muck, for example, just say it's not worth the hassle us trying to extract the silver from this muck. We'll sell it to the open market and have someone else sort this out, and then you can then resell it. Recently, and I think this is going to be across a lot of the metals complex, China did something very clever. It said, you know what, we're going to keep our muck, right?
Yep.
And everyone else went, where are we going to get our cheaper silver now? And China is now processing its own and recycling its own metals.
Why are they doing that, do you think? Because guess what's in all that muck, as you call it? And that's another Alcoa thing. What is, if you've ever seen it, it's known as red mud. What comes out of the waste of aluminium. It literally is a bright red, almost the colour of these chairs. It's full of these rare earth minerals.
Yes.
You know, Alcoa said, if we can work out a way to produce this, and they are working on it, they've hit a motherlode. And by the way, that's the end of all these rare earth stocks, by the way, if they do. Because they said, we've got more of this than anyone else in the world. Because we've been doing this longer than anybody else in the world.
This is really strange. Are you sure you haven't put a chip in my neck? Because we talk about these things and we haven't, on purpose, people, we on purpose have not rigged this in any way, because that's what makes really good, natural, engaging telly. And here we are talking about rare earths. It wasn't on the script. It wasn't on the script.
So you asked me about Alcoa.
Yes.
So look, it's gone up a lot. If you look at RSIs, relative strength, whatever you want to do, MACDs, any technical analysis you like, it is overbought. Okay, no question.
It's looking hot.
There we go.
Yes.
Look at that chart back there. That was when Russia invaded Ukraine. Power prices went through the roof, etc. You know, and so aluminium, which is basically quasi power after all, up it goes. Now, that top there, I think, is $90.
97.
All right, 97. Okay, so look, it's 65. Well, I suggest to you that it's better now than it was then.
How long will it take, though, to get up to
that 97? I can't tell you, but because the current rate, 2 weeks? No, I mean, what I mean, I'm just looking at the chart.
It is crazy at the moment.
Okay,
it is crazy.
So the point about it is that while I say take a profit in Old Dominion because things haven't got as good as the stock has indicated, with Alcoa, they most certainly have. Aluminium price, metals prices, that's what everybody owns. This stock is cheap, as in when I say it's cheap, it's only 16 billion market cap. You have to remember you're dealing with boring, snoring NVIDIA, 4.5 trillion. How about take a tiny smidge of your NVIDIA and buy this?
Yeah.
You know, and that I think is what's going to happen this year, by the way.
Yeah. And we've seen this year, silver volatility has outperformed, outstripped Bitcoin volatility.
Well, the thing is, all of these metals and virtually anything, they're all baby micro caps compared to the tech sector. So if we have this rotation, which is sort of what's happening, the moves in Alcoa, you see, if you want to buy Alcoa, sorry, there's not much of it to go round if you're just selling a little bit of NVIDIA to pay for it. There is only Alcoa, and it's your play. There's the whole thing of tariffs and China and power and all that. But, you know, so I stick with that. That's going higher.
Stick with that. So that's long.
Well, that's long,
Julian.
No, hold on. If it goes up another nuts from 65 to, say, 90 in a month, then you take it out. It must stop at the previous high. Sure.
What's the all bets are off, you know, take it off the table?
Well, if it goes straight to 90, I'll take it off. That's another 50%.
Yep. And currently with the enthusiasm that we're seeing in the markets, you know, it's
just up.
Short term, very exciting. So we talked about the long term investments. How about short term? What do you like?
Okay, short term. The most exciting thing in the market, it's also the number one performer this year. It's up a ridiculous 58%.
Oh, yes, it had that huge move.
It had that huge move when Jensen, crocodile suit and all, came out and said, you know what? Okay, this is SanDisk I'm talking about. There it is. SanDisk, it's a crazy, crazy stock. But
first week of the year.
First week of the year. What happened? At the Consumer Electronics Show in Vegas, CES.
Yes.
Jensen Huang got up and he did all his usual stuff. He talked about how do we get round the fact that high bandwidth memory from Micron, Hynix and Samsung is in chronic short supply. And you saw from Micron's earnings in December, they're just off the charts. Well, he said, well, there's another way of doing this. We think we can change the configuration around and we can use NAND. Boom. That's what SanDisk is. SanDisk is NAND. NAND memory, flash memory as it's called, goes in your phone, goes in stuff like that. If they can start to use NAND where they were using high bandwidth DRAM, that's much cheaper, much cheaper. The problem is there ain't much of this either.
Exactly.
Now, here's what SanDisk...
Which ties into the commodities play.
It's another thing in short supply. Now, what I heard, which is why... So we bought this when I heard that SanDisk is going out to the big cloud customers and saying, look, it's really simple. There isn't much of this around. If you want supply, we want to be paid now and at a good price. It's unheard of. You don't get upfront payment. You're the whipping boy. You're in the supply chain.
Yes.
We're Mr. Cloud. We tell the thing. No. These guys, they're not... And I met SanDisk at Christmas too. And they said, we're not going to put supply on just to help these boys. So they've got it. They've got it. So short term, look, this is really high octane stuff. However, the earnings, this is slated to do $13 of earnings.
Yeah.
I think it'll be, try 3.0.
Wow.
I think they'll do $30. And then next year it'll be 45 or 50. So I think this thing's probably trading at about 10 times its real earnings power. And so you might get one of these drop the mic moments on their next earnings call. But look, it's a momentum stock. It's proper stuff. This thing will move 10, 15% in a day. So for those who like trading,
here you go.
Enjoy yourselves. but you be very careful because you've got to be able to say, okay, it's down 15%, I'll buy my second piece.
And also, this is one that you probably want to have tight stops in.
Well, I don't think you can. No, I don't think you can because the thing whips around, you just get taken out. I think you have to say, I'll have a piece. And if it falls back 15%, I'll have another piece. Because I don't think it's going back below the price when Jensen spoke, and that's 290.
And potentially take it off before, if you're a cautious trader,
if you're a cautious trader, you take it off the night before the earnings. Because I see it going, and that is not till, I think that's the end of the month or early February.
Yeah.
So I think you've got a sort of two-week trade in this.
RKT.
Ah, Rocket. Yes, RKT, Rocket. This is Rocket Mortgage. I just saw a wonderful piece out on a very major survey from a whole heap of publications, the equivalent of Which in the States. You know, which is the best product? Rocket ranked highest along with something else called Rate. They got 7 awards where your best product in class. This is quite simply mortgages. This thing has put together the largest estate agent, the largest mortgage provider, and the largest mortgage servicer. A lot of people have said, wait a minute, you've got a monopoly here. And the answer is, yes, they have. But so what? Fine, hooray. If we're shareholders, we love that. This thing, it's on its tear at the moment. Mortgage rates just went below 6%. That's why it's started to move. Mortgage rates go down along with interest rates. You get a refi, and that's more activity for them.
My only concern with RKT is that recent broker updates, I think it was JP Morgan, they are looking at a $24 price target. We're almost there.
They always get it wrong. What I mean by that is they get it wrong. They never, well, all they do with these price targets is something that they can, it's like playing the high jump, you know, or that Swedish bloke, the guy, the pole vaulter, you know, he puts the bar where he can clear it and he moves the world record up by a centimetre each time. Probably in training, he'd do another 20.
Just like tech earnings, right?
Yes, like everybody. The earnings and price targets are set to be beaten because then they can raise. See, they go, oh, we've got to 24, now we have a new target. And we get to that, oh, new target. I think it's worth 30.
Okay, but
So
if
it's
volumes disappoint, if we've got this big commission pressure coming up, if we see, for example, anything that points towards a higher, more hawkish mortgage market.
Okay, higher rates, not good.
Yeah.
But where is higher rates coming from at the moment?
Not at the moment, but you know that would be a red flag, right?
Look, yes, that will go for the market. Okay, but the housing market, why I like Rocket, is that the housing market has been appalling, right? It's like buying housing related stocks, Builders First Source, which is a construction company, etc. Anything in housing has been bad, so you're coming off a really low base.
Gotcha. All right, thank you very much. So those are your long-term and short-term strategies. You're watching Expert View with myself and Julian Wheeler from Shard Capital.